right, all right. Well, good morning there, John. How's it going?
It's going good. Welcome, everybody, to another eye opener. These are Market Wealth Daily's little chats that we've been doing with some of the top traders. And we have got a rock star here. We got Blane Markham here from the Chuck Hughes trading team. And we're really excited to both his brain on what is going on in the markets today, but also follow up on a trade that we talked about the other day. So, really excited to have you back, Blane. Hope everything's going well for you today.
Yep, going well. It's busy week as always, and trying to keep up with the markets. And I'm expecting a little one here myself. I have a new member of the family coming in the next week or so, so we're super excited here, but also thrilled and pumped to be here live with you all this morning. So thanks for having me again, John.
Yeah, that's I can't believe that you look as great as you do, knowing that you got that on the brink, man. You're gonna have your hands full, that's for sure. Really excited for you.
No doubt about that. Yeah, no, it's exciting times here in the Markham household. No doubt.
Yeah, well, so uh let's just jump right in. It's a crazy day. Big stuff happening today. Looking for some news from the Fed. Interested to get your take on that and see what you're expecting.
Yeah, absolutely. So yeah, and, that's probably the biggest, if you're talking about current events today, we do have a Fed meeting today. They have certain scheduled meetings throughout the year. So today is the May meeting. They're wrapping up their 2-day session today. And so of course that will culminate here in just a couple hours. Where we'll get the official Fed rate decision from the FOMC committee. And largely, if you're looking at Fed futures markets, CME Fed Watch tool, things like that, that are predicting using those market instruments like Fed futures, what the Fed's decision is going to be on rates. Virtually guaranteed they're not going to choose to move rates today. It's almost just a lock that they're going to opt to keep policy levels at current at current rates. They're not going to move that Fed funds rate, which makes
Don't
sense.
jinx it.
Yeah, it makes sense given recent macroeconomic data, uncertainty looking forward regarding things, certainly like with tariffs and, what the actual direct impact's going to be on the economy. It's, really kind of up in the air, what that's actually going to unfold like. So, with inflation still remaining a little bit elevated, it's not quite down all the way to their target level yet. The labor market's still holding in there. There's no crisis, showing up in the hard data and the labor data. They really have no reason to cut at this point. They're of course, as a consumer, investor, everybody, obviously, we all love lower interest rates, right? I mean, of course, that's great, but the Fed has a different mission, different objective. So you have to look at it, stand in their shoes, and look at it from their perspective too. So likely not looking that they're going to cut. But what will probably be market moving out of that is Fed Chair Powell's press conference once he wraps up. So, once they wrap up their meeting, put out their decision, about 2 hours later, he normally hosts his press conference, issues a statement, and then takes, fields questions from reporters. And, typically that is when in this type of setup, you're seeing the market today. It's really anticipating what's going to happen. It doesn't really want to commit one way or another. When before I hopped on, John, markets looked like they were pretty much riding the flat line today, just really just not moving much. But that's typical for this kind of setup going into a meeting. So, I'm anticipating whatever Powell does say in there, whether it's, some added commentary regarding the economic outlook for the U.S. Whether he's adding some color to that, and talking about how now that we've begun to digest more so the recent tariff policy, more recent economic data, macro data, things like that. What he sees for the rest of the year, and even looking into next year, economy wise, things like that. Even trajectory of interest rates. I'm sure he'll probably stick to his typical message that, we're going to remain data dependent and, follow the data and all that. So probably anticipate to hear that from him. But, anytime he, lets some little detail slip, or, reporter gets him on a question, he's pretty good at those. But, sometimes he'll let a little secret out of the bag, and sometimes can move markets. So something definitely be watching today.
Yeah, that's an interesting point because everybody gets kind of fixated on is he going to adjust rates, and what they don't think about is what clues he's going to give for the future. And it's so easy to have your head to the grind, nose to the grindstone, and be watching the market so close. You forget that it's all about anticipation. That's what the market's about. The market isn't necessarily what's going on today; it's what people expect it to do in the future, and they're going to make their trades based on their expectations. So if they pick up some signal from him that adjust those expectations, it's going to change the way they trade. Both, regular retail traders like you and me, or some of the big money managers, they're going to be looking at that stuff, trying to read it. So, and I just want to remind everybody as we're going through this, go ahead, feel free to drop any questions in the chat. We're glad to have everybody with us today. We're really enjoying these sessions. We want to get you to come back and visit us often in these live rooms, because it's a great place for you to get information that you need. It's also good for us to see what's important to you. We do our best to anticipate that and to try to guess at what's important, but nothing better than getting it right from the source. So if there's something that you're looking at, that you're wondering about, feel free to drop it in there and we'll get to it. So, Blaine, we talked the other day about a trade that you were looking at, and I mean, I think you pretty much just spelled it out exactly the way it was going to move. So I'm interested to get your kind of follow up on that one.
Yeah, absolutely. Yeah, I'll go ahead and take over the screen share here, John, if that sounds good. Um,
Yeah.
and we can kind of go ahead and walk folks through the trade we're talking about. But yeah, exactly. On Monday session, I came in and I had just a trade kind of teed up for folks, and it was actually going to be for WRB. So let me go ahead and pull up the chart here. It's a WR Berkeley Core, ticker WRB. This is an insurance broker. They deal primarily in commercial lines of property and casualty insurance mostly. And I was talking about on Monday how the technical setup for this stock right here looked really, really strong, and was kind of ripe for a trade opportunity. And I walked through a call option purchase. If once I spotted this, how myself or our team here at Hughes Optioneering, how we would look to probably go ahead and trade this setup. And I talked specifically about the WRB June 20th expiration, and we looked at the 62.5 strike call, and that was trading on Monday during that session. I think it was right around 10.5 points. And of course, this is an insurance company. We're not dealing with the latest greatest AI startup here that's moving 5, 6, 10%, whatever, just crazy moves within a day. The boring old insurance company, right? But hey, look at this chart performance, relative to what we've experienced over the past couple of months in the market. It's been nice, just a steady move higher. Just been really consistent. And anybody who had spotted this trend earlier has been rewarded quite nicely, and it still is looking great now. And so, with all that said, since Monday, the stock hasn't had some, massive expansion higher, not some crazy outsized move, but it has continued trucking higher. It's up a little over 1% from the point in time where I found it on Monday. The option has had a nice, decent little return so far. Still looks really good. For anybody who would have actually taken that trade or followed it. It's currently right when I hopped on, it was trading at 11.1 points. So, it's up about 6%, dollar terms, that's about a $60 return. So, decent for, insurance company for, a longer term position, after just 2 days. So it's trucking right along and doing well. So been pleased to
Yeah,
see that so far.
it looks great. And that's kind of what you kind of how you wrapped it when we first talked about it the other day, is that, this is just a really steady Eddie kind of trade, and we need those. You need to kind of have that reliable, just kind of chug along, nice little income generator type of trade. And this is right in that wheelhouse. So appreciate it. We're going to keep an eye on it too. So I don't know that if it was me, everybody's got to make up their own trades. There's always risk in trading. You can always lose money. Hopefully everybody knows that. We want to make sure that you're aware of it. There's a lot of places to get information about the risk of trading. We hope you look into it. But for me, I wouldn't exit it yet. I'd be hanging on to it. I'd be watching for that time decay and looking at the right time to get out before it starts to get too close to expiration. But we got a few weeks for that. So I think there's more here. There's more meat on the bone.
Yep, absolutely. I totally agree with you. For speaking personally, there's still a nice runway in front of this trade here. If I was holding this, of course, I'm not going to come on and talk my book and talk about positions I actually hold, or come on and recommend them and take these positions right after. I'm not in that business. Don't want to do that. But if I were holding this position, it definitely looks like it still has a nice runway in front of it, and would be still looking to hold it for a little bit longer. The trend's still good. The technicals still look really solid on this, so has a nice runway in front of it. So John, the next thing I wanted to just hop into, just a brief, just kind of overview, just where we stand in the market, if I could, just with the S&P 500 index, if that sounds good.
Well, I'm looking forward to it. I was hoping that you'd do that, because I know you usually pick up on a lot of stuff that I don't catch. So I want to hear what you're looking at.
Sure, yeah. So On Monday, I took, some time and kind of talked extensively about, how much we had rallied recently off of the recent April lows. We had moved up. We had just come off a stretch where the S&P had advanced in 9 consecutive trading sessions, something that hadn't happened in over 20 years. Not unprecedented movement, but rarely precedented. Something that does not happen very often. And so you can see right here, this is this past Friday, this last black open high low close bar right here. So that's this past Friday. You can see we've actually been pulling back a little bit since then. And as I, was saying, I was after that run where the market had rallied back up to, I was saying I fully expected that we were likely going to run into some resistance at that level, and not that we're going to go right back down and retest the lows. I wasn't anticipating that outside of some other black swan market shock event. I don't think we're in for that, but I was, trying to articulate that I think that, we're likely going to be in for a little bit of chop. We're going to be trying to test some resistance levels, hold some support levels, and, maybe trade, kind of sideways for a couple weeks because we had just such a strong run. Probably pull back and, just be maybe range bound for a little bit. So I think you can kind of see some early signs of that starting to form. We see on Friday we rallied all the way up to 5,700. That was still shy of the 200-day simple moving average, which I talked a lot about on Monday, is a kind of a next key resistance level. But you also see that 5,700, that is exactly almost to the penny where the S&P 500 was trading at, or at least the intraday high on the day. You said this bar right here, I believe this was April 2nd. So this was the day that the Liberation Day tariffs were announced. So if you remember, the market actually rallied into the close that day before President Trump held the press conference announcing all of the Liberation Day tariffs, which led to the severe market sell-off in the subsequent days in April. So you can see this is that trading day right here. So this is the where the market was trading at before that announcement. You can see we traded right back up to there, and we found, I was anticipating we're going to see some resistance at that level as well. So it's just a little bit shy of our 200 simple moving day average, or 200-day simple moving average, sorry. And so, it seems that this level of 5,700 is going to be a really key level. It's going to be a key test moving forward. So we can see the market traded up, kind of, bumped its head at 5,700 and started trading back down. And I think, at least for the coming days, we're probably going to see the index level at least stuck somewhere probably between 5,550, 5,500, call it. But probably more like 5,550 and 5,700, because, again, you can see there's clear technical resistance here. This is a really key, integral day to what's been happening in the market lately. We traded right back up again, almost to the penny, to that level of resistance, bounced down, traded off of it. And then now why 5550 is so important is because, once we got up to this level, you can see again, that was another technical hurdle for the market to clear. It traded up and bounced off of right around 5,500, 5,550 a couple times before it was able to close above that level. Now we have our 50-day simple moving average falling. It's like almost right on point. It's got its targets set straight on that 5,550 level. So, whereas this 50-day simple moving average was serving previously as a level of resistance, now that it's broken through that, it's broken through this level of resistance at 5,550. It's, broken through that resistance. Well, in technical analysis, how that works is once it breaks through the resistance, that's going to now turn into a level of support. So that's what I'm fully anticipating. Just at least, the week or 2 weeks to come, is to see the, markets be stuck kind of in this range between 5,700, 5,550, and try and break out one way. So, obviously hope to see that the support right around 5,550 holds, and, maybe retest that a couple times, trade back up. That's what I would anticipate after just the rip-roaring rally that we had, we experienced in the last couple of weeks. Probably go down, test some support, hopefully to see that hold, and then off of that trade back up to that 5,700 level and perhaps break through.
The analogy I used the other day, it's kind of like a dog with one of those invisible fences, and they run across the line. And then all of a sudden, it being a fence now becomes a place they don't want to go back down and go back across. It switches from resistance to support in that same kind of concept where,
Yep.
once it's through there, it's a model. And, I don't want to get into too too much detail, but you look at this and all these numbers, we're not the only ones looking at these. There's a lot of people looking at them, and it becomes a psychological factor in the way people trade. And also, even more mechanical than that, a lot of people will have trade systems set at those parameters. And so uh, it is significant. It's not just a line on a chart. There's a lot behind it. And, it's a little self-fulfilling. Once that people start following that line, that becomes a driver. So really important stuff to pay attention to, and great to get that insight into it, Blaine. Appreciate you sharing that with us.
Yeah, absolutely. I couldn't agree with how you summarized that any better. So I appreciate that, John. But the last thing I kind of want to touch on today is just the next topic. If you anybody out there following along with our Telegram channel, you probably actually saw me hint around at this last night when I sent out a post. So if you're not following us there, definitely check us out on Telegram. We have a great channel going there. But the next thing I want to talk about is just the current price in gold and the trend we've seen this year, and possibly some trading opportunities around that. So if that sounds good, John, I'll go ahead and hop over into the next thing I wanted to touch on this morning.
Oh, absolutely. We're always looking for the next thing to explore and look for a great setup and an opportunity. So if you want to share it with us, I'm interested to hear. I kind of been keeping half an eye on that, but I wasn't sure, what to do with it. You see it and you see the trend playing out, but excited to get your insight on that.
Yeah, absolutely. So, anybody out there, you've certainly been following the markets. You've probably seen it's been a tough year, but not everything's had such a tough year. Gold, on the other hand, gold has just been a stellar outperformer this year. It's up a little over 30% on the year to date. It's just been an absolute rock star this year. For all the gold bugs out there, they've been really letting people hear it, talking about, oh, look at my gold, it's outperforming the S&P, you know, you're hearing a lot of that, but nonetheless, it certainly has been a nice hedge for anybody that's into gold, or folks that are looking to take advantage of this via the options market or whatever it may be. But you can see, so this is looking at the past year's worth of trading activity. So this is the 1 year chart here for GLD. This is the Spider Gold Shares ETF. So just the GLD ETF. And so you can see it's just been just stellar performance thus far this year. You can see just incredible technicals intact here. Just almost a year-long series of higher highs and higher lows. Just so many new 52-week highs. In fact, a lot of all-time highs printed here on the GLD ETF. So just stellar performance. Again, you can see our red line here. It's our shorter-term EMA. That's a 21-day EMA. Trading above our green line down here, that's our 63-day EMA. It's actually having a bit of a widening here between those two. So we're seeing a widening between the two EMAs. So just really, really strong technicals there. You see that it traded above our upper Keltner channel here, pulled back to the middle, and is now rallying higher yet again. But is still not. It's not trading above those upper Keltner channels yet again. So it's seemingly not at this current level, at least in the short term speaking, trading in an overbought state. It's still inside that upper Keltner channel band. So there's certainly some nice opportunities presenting itself in gold. And one thing I want to point out just in this lower chart too, before we move a little further, is just showing you just the relative outperformance of gold compared to the US dollar. Now, typically these two things, they kind of work in the inverse of one another. So when one is rising, the other is typically falling. That's largely just because of how gold is priced. Gold is typically a dollarized asset, so people are looking at the value in gold in terms of dollars. So when they move, have an inverse correlation with one another typically. And you can see over the past week as gold started pulling back, you probably have seen also the U.S. dollar value has been dropping dramatically. Over the past couple months, largely related to the trade war. But you can see there started to be some early signs that it almost looked like that was starting to unwind, that recent relative outperformance of gold compared to the US dollar, which you can see illustrated in this ratio chart down here. This is just comparing the price of gold to the US dollar. It's relative to the US dollar. And you can see this past week, it was starting to decline. So right here, as it's sloping up, that means gold that is outperforming the US dollar. When it starts contracting in this chart, that means that gold is underperforming compared to the US dollar. So it looked like there might start, be some cracks starting to form in that trend, but The past couple of days, really this trading week, that's really erased itself. See, we've had some just serious gaps higher in GLD. It's resumed that previous bullish trend, and looks like it's charging right back up to those 52-week highs that we saw just a couple weeks ago. So it looks like that GLD's upward trend is not quite done yet. Even after gold, which again not considered to be a hyper growth, crazy growth asset. It's more of a considered a portfolio hedge, add, just to kind of be a steady Eddie thing. You store value, but even though it's up over 30% this year, it looks like this bullish trend is still alive and well, and probably has some room higher. So with all that said, there's a couple ways you could go potentially look to take advantage of this. If you're looking more for a directional opportunity, well, you could look no further than just looking at GLD right here. They have tons of options on GLD. This is a very optionable ETF, so you could potentially look to go ahead and go long gold via just buying GLD, or looking to buy call options on GLD, something like that. But one thing I would maybe prefer over that, me personally, is to look at a non-directional strategy. So, we're talking about something that's going to involve selling some option premium, something like our call option debit spread strategy. And typically, I find a tougher time doing, setting up spreads directly on GLD, just because it is typically such a low beta, low volatility asset that often, it does not have very much option premium in its much time value baked into those option premiums. So, they usually don't have very rich option premiums. It's, pretty low time value. So it's tough to find a good debit spread for GLD. But when we do have a nice outperformance in gold, there's another way to take advantage of that still via those call option debit spreads, and that's looking towards the gold miners. So there's, if you're unfamiliar with these, there's a handful of publicly traded gold miner stocks. You have, AEM, you have WPM, you have NEM, Newmont. So there's a handful of these different publicly traded gold miner stocks. There's even, in fact, the gold miners ETF as well, GDX. But what I'm going to look at today is actually how I would look to go ahead and just place a call option debit spread on one of these gold miners, to go ahead and take advantage of this nice bullish outperformance in gold. So, the miners obviously have the downstream effect of they're mining this thing. They're actually mining the commodity, pulling it out of the ground. And when the price is rising for gold, well, that just translates directly to higher, bigger profits on, the bottom of their earnings. So, that it's a nice tailwind for them as well when you have a rising asset or rising commodity price in gold. So let's go ahead and hop in here to the chart for this gold miner. The one we're looking at today is going to be AEM. This is Agnico Eagle Mines. So if you want to go find that ticker yourself and take a look. But again, this is looking at the past year's worth of trading for AEM. So again, you can see it's benefited right in tandem with the price of gold rising. The commodity they're pulling out of the ground. The value of that commodity has been rising quite a bit. Well, that's translating directly to higher profits for them. So they're benefiting directly from that. And so is their share price. So you can see they've had a nice series of higher highs and higher lows, set a lot of new highs over the past year. And right now we have a handful of technical buy signals going on. So, we have our EMA buy signal going on here. Stock price is trading above both. So that's fantastic. And given they're not trading above those upper bands, they're not currently overbought. So, it's offering a really attractive setup here in this AEM gold miner stock right here. So with that, generally these gold miner stocks, they move a little bit more. They're a little more volatile, have a little higher beta, higher volatility than just the gold commodity price or gold ETF share price itself. So that's why these, I prefer these when I'm looking to trade. If I want to have a gold related call option debit spread, these gold miners typically carry a lot more time value and time premium in their option premiums. So it makes it a little more attractive for trading option debit spread. So now that we've seen a great looking chart here for Agnico, let's go ahead and hop into a trade. I actually went and found one ahead of time. Have to check and see. It looks like the prices may have moved just a little bit, so we might have to bump this out a little bit. Looks like those moved a little bit. So let's hop out and see. Yeah, they have July options. So we can go ahead and take a look at the July options here. So We can, we're going to be obviously looking in the money calls. That's how, we like to trade option debit spreads here at the Hughes Optioneering team. We like our in the money debit spreads. So let's just go ahead and take a look right here. If we were to sell or buy the 195 and sell the 100, so you can see that's actually a really attractive looking trade. So for the July 18th AEM calls, if we were to buy the 95, sell the 100 simultaneous entry, you can see that's currently coming in right around 4 points. It's moving around. It was just at 3.95 just a second ago. So it's probably trading right around that range. But if you got in somewhere, at 4 points or lower, you're going to have that 25% profit potential or higher for that trade. And why, by doing this, since this is a call option debit spread, that trade is actually going to be able to profit regardless of whether AEM continues to trade higher from here, remains flat, or since we're with this trade, we would be selling the 100 strike call. You can see that's what we're selling, the 100 strike call. That means AEM shares could actually fall all the way down to $100 per share. And as long as their AEM is trading at $100 per share or higher at option expiration, then this call spread would be set to realize its full profit potential. And just to show you on the chart what I mean by this, right here is our 100 strike call. So you can see how far down that's 18 over 18 points in the money from current price levels for AEM. So if you were to buy the 95, which is right here, sell the 100, that's your spread right there. And you can see where AEM is currently trading at, just a touch above 118. So, that trade would have some significant downside protection. So AEM could rise, could trade flat, or even fall by $18 a share, and the trade would still be set to realize its full profit potential at option expiration. So, that's just real quick, John, just how one way I would look to go ahead and trade that recent reacceleration in the relative outperformance of gold compared to the dollar.
No, really good to get that breakdown on this. I'm trying to keep the mindset of our audience out here and everybody who's watching this. They're constantly. It's such a struggle. You get up in the morning, you open up your computer, and you're looking for, where do I go? Where do I look at? And you get ideas. You might read some headlines. You might do that. It's a challenge to find these opportunities. What's really great is some of the services that you guys have put together, and it's a whole different range at different levels. But some of them are really simple. You can just log on, you can sign up. The barrier to entry is great. I mean, some of them are pretty inexpensive, and you can get a good trade idea, set up an actual trade. Uh, you know, that you can then process and make the choice if you want to take it or not take it, and follow the logic behind it. The education that you offer with those programs is great. I look at this as a great example. It's like, this is a valuable piece of information. This has a very significant value to it, and it'd be worthwhile to me. Now we're using it as an example here on there, but you guys do a lot of this, don't you?
Oh yeah, absolutely. We certainly do. And as you mentioned, we have a handful, kind of a suite of different products where, we dive into, trade analysis like that. We're either we have tools here working automatically for us, or, we're, down there, looking in the stock charts, searching across the markets, trying to pinpoint opportunities, just like the one I just walked you through. But all that said, we have a lot of different products where if you sign up, you're a customer, you will actually receive these trade alerts that us or our tools are finding. And so, one example of this is our Options for Income newsletter. It's posted every single week. You're going to get that once per week on Tuesdays, and that's actually going to include some of the strategies like I walked through today. Excuse me. That's going to include they include four brand new trade recommendations each week. It's going to include two option debit spreads. So just like the call option debit spread I just walked you through there, you're going to get two option debit spread recommendations per week. And additionally, it also includes two covered call recommendations as well. So it's, this again, it's the Options for Income newsletter. It's focused on an income tilt. So with these strategies that involve selling call premium or, just selling option premium as a part of the strategy. So right now we have a great promo running for that, John. We're offering folks, if they want to go ahead and sign up, if they're not currently a member, want to go ahead and, dip their toe in the water and test it out, see what it's all about. They can actually go up and sign up for their first month for just $1. I mean, it's just an incredible deal we have running right now for that. So, John, I think you actually have the link for that in case folks watching at home want to go ahead and click that. If you want to go ahead and
I
drop that in
did.
the chat so folks can check it out, that'd be great.
Yeah, I just shared it with everybody. And the great thing about it, it's a buck. All right. So you saw this example here. It's a great example of a good trade. It's very well thought out, a lot of time and effort put into it. Um, you know, this is not something that is impossible for you to find. There's just a lot of work in order to do that, and the hope is that, getting a trade like this at least once a week is worth more than $1 to you. And if it is, then check this out. You can cancel the membership, the subscription at any time, and it's really clear what you're getting into. So there's no secrets, there's no gotchas on this stuff. You just go ahead and give it a test and see how it goes. I'm pretty confident that's the kind of thing that you're going to find is really worthwhile. So I hope everybody can take advantage of that. And we'll definitely make sure that link is available so everybody can check it out. Um, Blane, this is awesome. I really am enjoying these. I hope everybody in the audience is too. And again, if there's any questions that anybody has, definitely type it in the chat. Let us know what you're thinking. If you're, already a customer of one of these products, one of these services that these guys are offering, I'd love to hear about it. Let us know. This is a two-way street here. We're not just out here talking to ourselves. We want to hear from you guys as well. Um, you know, uh, this is important. We're going to do this on a regular basis. So we want to keep continuity. We want to be able to say, hey, look at that, what we looked at last week. Here's what it did this week. Look at the next one and keep it going. We're going to be bringing on a lot of great people. We really want the audience to be a part of it. So hopefully, if you're seeing this, check for the schedule. We're going to make the schedule available to you. And it's also on our website at tradewinsdaily.com. Check it out. We want to have you come back. Blane, I know that we talked about in the beginning of this session, you got a lot going on, my man. You have got your hands full with the baby on the way, and of course, doing all this research to help these folks find great trades, and then just living your own life too. So, I'm grateful for the time that you take to share with us. Really enjoy these chats and appreciate it very much.
Yeah, absolutely, John. I feel the same way. I definitely a lot goes into it, but I love being able to join these sessions. I really appreciate you inviting me on. I look forward to doing these in the future. As you mentioned, we have these kind of scheduled out. Moving forward, I'll be hopping on pretty much every Monday and Wednesday. Pending just things coming up. So you can, folks, if you're watching at home, you can expect to see me here live every morning. Typically Monday, Wednesday. Sitting down with John, sharing my current, overview of the market, where I see things going, what's important to watch, things like that, different opportunities. So really look forward to this moving forward. These are fun sessions. I really enjoy it. I like, really enjoy getting the engagement from the users watching at home. So again, thanks so much and looking forward to what's to come.
Awesome. All right, everybody. Well, thanks for joining us. We're going to wrap up and we will be sending out information about upcoming events. Blane, you have a great weekend and we'll be bringing you back Monday. I can't wait to catch up again.
Yep, absolutely. You too, John. Take care. Have a great week, everybody.